Let's take a look at the hybrid proof of work, proof of stake chain, Decred for BraveNewCoin. So Decred is what I'll call a Bitcoin adjacent chain, which is not a bad thing. Anytime I bring that up, people love to correct me, which is fine. But its roots are of in Bitcoin's roots, we'll put it like that. And I love DCRstats.com. They break it all down for you. The data nerd that I am, 63.8% mined so far with a total of 21 million eventuals in circulation. Mostly proof of work mined, 52% here. They did have a pre-mine, they did have an airdrop, they do have a dev subsidy, and then 26% of that is proof of stake mined currently in circulation. And you can see the breakdown here of the block reward, average block time of 5 minutes. And that's really the important stuff there. And then hash rate, one thing that always impresses me or usually is that the solo miners for DCR is 31%. That is a massive, gigantic, envious percentage of hash rate for any proof of work chain. Most proof of work chains are 3, maybe 4 pools that hopefully aren't 51% in total. But not only is DCR hybrid proof of work, proof of stake preventing any 51% attack shenanigans, but 31%, almost the biggest slice of this pie, is solo miners. So good for them. I hope this data is accurate. I hope I'm not celebrating it too hard. But that's what you want to see if you're looking for decentralization. If we look at hash rate, it kind of fell with some of the China stuff, but it's stabilized since then. It's nothing too crazy there, and difficulty has also recovered from the lows, probably China related ish stuff there. Anything mining took a big hit when the China stuff got cleared out. The nodes on the network sits at 254 according to DCR stats. That's quite low, so I hope that's wrong actually, and the map never works for me, but you want to see these nodes all over the world, different people, different places. Decentralization. The network uses the Blake 256R14 algorithm, and at 4 cents per kilowatt hour, which is what most industrial miners get, everything for the most part here is in profit. The issue really is there hasn't been a new ASIC aside from this one since really 2018. Most of this is 2018. So it's interesting to me that there aren't more on this list, considering price exploded over the past year. Usually when you see price interest increasing, like DCR did, you see a bunch of shovel sellers ready to sell you that shovel. It may be because profitability is lower than other chains, but this doesn't look bad as far as profitability is concerned per day. So it might take you a while to get ROI on this, but a bit surprising we haven't seen more ASIC manufacturers pile on board here. Maybe it's a chip issue more than anything at the end of the day, supply chain issue. But still plenty of profitability to be had there. And when we're talking about profitability, there's a metric called the Puel multiple that takes a look at whether or not miners are in heavy profit. Are they in heavy losses? What is the moving average on that over time? Currently, they're basically parity, unity, whatever you want to think of it as. And they're not too rich. They're not too poor. They're unlikely to probably sell in a significant way at current prices. They're more likely to sell if price goes up from here. And in general, they're most likely to do anything at the extremes. So miners probably not going to do anything here relative to anything they've done since 2016. Decred also has a DEX. And if we look at the volume per day here, it has flattened out significantly, I'd say, since the beginning of the year, but that's kind of across the board for all of DeFi stuff. Unless you're some flashy AMM pool offering some Ponzi-like level of yield, a lot of eyeballs just aren't going to come your way. And that isn't to say that the DEX is working and is valuable. It just, the volume kind of speaks for itself. If we take a look at the staking component, 61% of the network is being staked with an adjusted reward of 1.4%, which is kind of lower than stablecoin borrowing yield, which has to be fairly high right now. Let me just take a look at that because I'm curious. So the supply APY for USDC, which has no volatility, ideally, it's a stablecoin, is 8%, Tether 10%. This is a supply and demand system here as well. But my point is, if you're somebody with a ton of money and you don't want to expose yourself to volatility risk, you're more than likely going to participate in this stuff, even though it is variable, volatile as far as the supply APY is concerned. You're more likely to participate in this than Decred, unless you're some Decred knowledgeable individual where you believe in the protocol long term. Legacy money is much more easily going to flow into stuff like this than staking for any coin. For the ticket stuff, there is a time lock component, and it's good to see staking slowly increase over time. You can see the percentages increasing significantly since 2017 as far as what's just kind of off the table to be sold on exchanges. Ticket prices increasing. That's a supply and demand system as well. So it doesn't look bearish by any means. I just think most people are probably going to go to DeFi, right? They're going to get this 10% yield instead of a 1.5% yield. Looking at transaction counts and average transaction values, transaction counts have dipped pretty hard over the past few months. You can see where the DEX kind of took off and it became a new chain. And ever since then, transaction counts have kind of followed DEX volume, at least correlated with DEX volume as far as I can tell, kind of sitting at multi-month lows. So if you're bullish on DCR, you want to see activity pick up again. Average transaction values, for the most part, just following price. Typically see a lot of activity when price is exploding, when price is at all-time highs, that sort of thing. So nothing too crazy happening on that front. And they do have a privacy component, even though for the most part, this stuff is easily discoverable by all of the chain analytics companies. So unless it's Monero, they'll find you, basically. It's great that they have this stuff as an option, and it's great that it's not completely transparent as far as what goes on if you're using this stuff, but it isn't ironclad privacy, we'll put it that way. This has slowly been increasing over time, which is good. It means people are actually using it, right? They're doing something with the protocol on that side of things. Active addresses continuing to increase and still really holding at highs. You know, it's holding at the previous all-time high, which was a mega all-time high before that. And a lot of this is DEX related, but it's hard. You can't be bearish on active addresses that look like that. It would certainly look more bullish if this was starting to increase instead of decrease, but it doesn't look terrible by any means. If we look at NVT, which is a measure of economic utility relative to price, NVT is creeping out of the buy zone and starting to be bullish again, even though price to me looks, flat. It looks boring, unexciting. Maybe that's where you want to buy. But based on this metric, which for me is a tough sell, but based on this metric, it does look more bullish than bearish. We'll put it that way. I much prefer MVRV, a measure of market cap versus realized cap or on-chain activity. And you can see the buy zones here, the sell zones here. It's currently basically at parity unity, just like the Puel multiple. There's plenty of upside here if this is going to be bullish in Q4, which I expect everything to be bullish in Q4 on the heels of BTC. So the USD pair should do fine. It's the relative pairs that are going to have some trouble against BTC, against ETH. We could take a look at unrealized profit loss. You can see there's no crazy disequilibrium here between people who are in mega profit, people who are in mega losses, buy zone, sell zone, oscillator situation here. None of that. It's just completely flat, which is where you want it to be if you're starting something to the upside. This started its crazy trend at the end of 2020, beginning of 2021, when it was sitting kind of in this despairish zone for months. So you need not a capitulation, but a consolidation zone area, a springboard to go higher. These charts, by the way, check on chain.com. Excellent resource for free data like this. Hodl waves measure on-chain activity over time. It's like a geological slice as far as what's happened on any given day. For Bitcoin, price movements have correlated pretty well with 50% of the chain moving in the recent 6-month period. For Decred, because of how the ticketing system works, I don't see a signal here that's usable as far as on-chain activity relative to highs. There's so much churn with on-chain activity, which isn't bullish or bearish. It just means that it's going to be harder to read this. Maybe you could say when 80% of the chain has moved in the past 3 months, 85%, that's a top, but there's backtesting just doesn't help you here. So it's good that we have this data. It's good to continue looking at it. I just don't think there's a necessary signal here compared to BTC. That's super clean. Just looks kind of noisy to me. Decred also has a governance component. You can take a look at all those, the approved stuff. Most of this for most coins is usually marketing, some development stuff, but I'd say a vast majority of it is marketing, which is fine. They're voting on how to spend the budget for the treasury component. So I don't personally have any issues with that at all, as long as devs are getting paid for what they're doing. That's really the bigger issue. Decred treasury inflows have kind of flattened out here, which is probably a good thing because they're holding a ton of Decred, a ton of notional value. So unless they're, needing to pay people and don't have the money, right, it's fine. But we can see on DCR stats, the dev subsidy is quite small. But I like that they have their treasury. I like that they can pay the devs. The sloppy part is always divvying out the money, right? The easy step is, like in Zcash's case, getting the money from the block reward. Most people can get behind that. Deciding where the money goes is the hard part. That's where the decentralization kind of breaks down. Looking at Decred on the Google trends, basically flat and rising slightly. If you're bullish, you want to see this rising more over time. Curiously, this didn't even really rise when price exploded. So maybe Google trends isn't a great metric for Decred overall if it didn't even pick up that price movement in January. This was the uptick. This was the mega all-time high right here. And we're almost surpassing that already. Flipping gears to technicals, this is the 1-year MA multiplier. The green is the 1-year MA. The red is the multiplier. The white is the midline between the two. How this generally works is it's an oscillator. Buy zone is green, red zone is sell. And on backtesting, even though we don't have a lot of data, it's been pretty accurate. It's told you where to buy. Now, it doesn't give you the best buy, right? It just flashed green at 46 in 2018 and dipped all the way down to 10 in 2020. You'd be holding for that long waiting for this thing to finally take off. So it doesn't give you the best price always, but it does tell you on a relative basis over the past year that this is the better time to buy, this is a better time to sell. So currently we're approaching that buy zone again. Is it going to be a mini tippy tap or is it going to be a multi-year downtrend? I don't know, but it's telling you based on the past year, this is a decent buy area. Targets of 350 and basically 600. This will keep increasing over time slowly so long as price is increasing. And it's just telling you, yeah, the 5x is still valid from here. And that'd be about around 600. So assuming this goes mega bull in Q4, I'd be watching for those levels. On the 5200 cross, yearly pivots, VPVR, RSI, and volume here. Not a lot of stuff to really say other than this is kind of sideways, trendless at the moment. It's got a death cross, still near the 200. It's reminiscent of the previous M double top sideways in 2018. It is slightly M double toppy. I don't think it's turbo ultra bear just yet. We'll see what happens in Q4. Now, if this thing can't escape its all-time high in Q4, I don't think Q1's going to be bullish. So I plan for that. I think there's going to be a lot of people taking profits who were long or have been holding for a year for long-term cap gains versus short-term cap gains, that sort of thing. So I'd be careful with that because this thing has had a crazy run about a year ago. Other than that, you're waiting for bullish 5200 cross, price above 140, that sort of thing. The yearly pivot right there, showing you resistance. And volume RSI not really helping you out. If this thing crumbles, it's going to 30 based on pivots and VPVR. Cloud likes 140 as well, as far as when this thing turns bullish again. You could see it had a brief attempt at bullishness with a bit of a rising wedge breakdown here, but was unable to hold above the cloud, just like everything at the time. A lot of the crypto charts looked exactly like this up until September. After September, you got your differentiation between BTC and ETH and everything else. So Decred needs to get back above 140 for some bullishness, and you can see the differentiation against BTC on the BTC pair where it just has absolutely melted down since August after Diamond Top plus Death Cross. It's going to 0014 most likely based on VPVR since 2016. So that's certainly not bullish and not bearish enough to start buying, I don't think yet. You're looking for a multi-week bull div probably with some volume spike here on whatever exchange you're trading. Probably not Polo because the volume is quite poor. But this is Binance and there just is no volume here. Nobody cares, right? Nobody's selling even though it's just melting down like a popsicle in the summer heat. And DCR ETH on the daily also at all-time lows. Not bullish. You could argue maybe bull div here, but this just doesn't look bad enough to buy for me. I want to see this thing just completely obliterate all-time lows before rotating into DCR from ETH. If I was even trading that, you want to see some emotions down there, some fear, some pain, capitulation, that sort of thing. Buy when there's blood in the streets, as they say. And lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all of the fun vaults and things I'm in here, as well as the trades and the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.